Hi, folks. Welcome back to Money and Politics. It is Friday afternoon, and I'm happy to be joining you again. Sorry I haven't been available as much as I would have liked to be over the last several days. It's been a crazy time period in the market. We've had a lot of cross currents coming up. We had the Federal Reserve talking this week, and really that was kind of a nothing burger, but so many people are worried about it. What I would say about the Federal Reserve and interest rates right now is that interest rates are going to go up. And you've got a bunch of different people in the market guessing how many times they're going to increase over the next year. The truth is nobody knows, so why worry about it? I don't mean that exactly, but the point is people get all hung up on things in the short term that don't mean a lot in the long term, and I'm a long-term guy. So I'm not trying to day trade it. I'm not trying to second guess from one moment to the next which way the Federal Reserve is going to go, and I don't think you should be doing it either. What the Federal Reserve will try to do, I think that they'll have at least 3 increases this year, maybe 4 is my best guess. They'll see how that's going. They'll see what other things are going on in the world. How much is the global economy recovering, which we cannot, no one knows the answer to that. Are we done with COVID? Is it finally going away? No one knows that. The Fed doesn't know that. They don't therefore know how fast is the economy going. If COVID hangs around longer, that will slow down the growth of the economy, which would be by itself bringing down inflationary, impacting the goods and services, I should say. What we need to have happen is to avoid raging inflation is to have the Fed increase interest rates to some extent, raise up the price of money. That'll slow down consumption some. And then if we can increase production, bring in more goods, that'll help keep the prices down because we'll have more goods to buy. So that's the short version, but relative to the Fed, I wouldn't be worrying about it overly so. I think the stock market has been worrying about it overly so. Let's take a look, and we'll start off as we normally do with Humble. Today, Humble was up as the markets were up strongly. You can see that we're up, not significantly in terms of stock price movement, less than a penny, but at least it was an up day. And if we look at where we've gone over the last month, we can see how choppy it's been. And that's indicative of a number of things in the stock market. One of my favorite stocks besides Humble has been, of course, InMode. InMode shot up today, 8.5%. I've been buying as it has been down, so you can see this is a one-day chart. But if we go to the 1-month chart, it looks pretty ugly. And if you go to the 6-month chart, it doesn't look much better, although that gives you a broader perspective. Let me go back to that 1-month chart. And I am saying that we're going to have the earnings coming out. They've announced it on February 10. So we're coming up to that very shortly, a week from Friday or so, or 2 weeks, more or less, about 2 weeks from today. I'm still very big. I'm still very pushing Humble. I think I'm right. I think the market is wrong. I'm just making that blatant, and you see that we are. I'm sorry, I was distracted by reading that. Again, I've told the story many times that we are having phenomenal growth in InMode, in this company that is kind of like plastic surgery without a knife. It does it with their devices, rearranging, sculpting the body with the fat kind of underneath the surface of the skin. So they do it with almost like radio waves. All right, let's take a look. Here's a stock that has really tumbled that we've talked about before. And this has been a great disappointment over the last year. Let me bring up a 1-year chart. And we can see we're down to 739. Well, it came up a little today. The volume was kind of light. You can see in the far bottom left, According to Yahoo Finance, this is undervalued. So Zynex, we think, should be going up some. And of course, at this price, if it goes up from $7.39 to $11, you're going to be up about 50% or so. And back, this is the one-year chart. When was it last at about 11? So right about, actually, if we look here, on November 8th, it was at $13. So for me to say if it goes to 11, you'd be up 50%. That's not that much of a stretch. So I would say if you want to put some money to work, don't go hog wild, but if you want to, if you don't have a position, I would open one. If you have a position, you might want to add to it. By the way, I mentioned on InMode, I have been adding to my position on that. And then let's take a look at one we haven't talked about recently, FNGU, which again is an exchange-traded note, 3 times leveraged. I'm going to take myself out of here so I can just remind you that this is where you can buy. In their top holdings, it's 10% across the board, but you're getting these great companies such as Alibaba, Google, Amazon, Apple, Baidu, Facebook, Netflix, which has come down quite a lot recently, and Tesla and Twitter. I'm not really big on Twitter, but I think the rest of these are reasonably good companies, Facebook too. So you're getting all of that in one fell swoop. And so that's another way that you can affordably buy at $24 to get that FNGU. It's a good way to diversify yourself and get some growth, I think, over the coming year and certainly over the multiple years. If we look at, I'm going to bring one thing else in because I was playing with this. And trying to get an idea of where some of the different things that we've talked about have been going over the last 6 months or so. And what we see is in the number 1 position is VET. That's the black line. We haven't talked about that too much. But right up there is the pale green. That's NRGU. That's an oil play. I have talked about that. So you have 2 oil plays right up there. And then in third place, you have DIG, which is the third place oil company. So over the last 6 months, certainly the oils have been strong. You got ST in there at up 29% in the last 6 months, and then followed by UPRO, which with the markets having been down for a while now are not doing tremendously. If we click over to a 1-year chart, you're going to see that the NRGU, and that's Nancy Robert George Union, FRGU up in the last year 276%, followed by VET at 235%. And by the way, if you look at the red line down at the bottom that looks flat, that's the overall market for the last year. That's the S&P 500. And the S&P 500 up about 15.75%, a dip here in January. It had a good year last year, and if we go back just a little bit to about January 12, then in the last year, going back to January 12 to January 12, it was up about 25%, the S&P was. But you can see these other selections that we've talked about have done so much better, including InMode, which has fallen, as you can see here in purple, quite a lot in the last bit of time. But it was up about 200% as of November 1st. I am expecting it to come back InMode, that is, as we move forward. We're getting the earnings on February 10, and probably in the late February, we're going to be getting Humble. Somewhere between Valentine's Day and the end of February, I would say we're going to be getting Humble's earnings for the fourth quarter. So that'll be interesting to take a look at. And obviously, if there's any other news coming up since then. I don't want to be talking about Humble all the time. One, because there's other stories to cover, and two, I don't want to be talking about Humble all the time because one of the things I've probably wrongly encouraged over the last year in my coverage has been that by covering sometimes things every day, I'm telling you that the best way to trade is not to be looking at it every day unless you're trying to be a day trader, which I am not. And so when I cover it all the time like that, I probably give you the wrong idea. A lot of times with Humble, you want to know and maybe look at it 2 times a week. Buy it on the dips if you want. You know, at a certain point, you probably got enough of your money in there. And it's hard for me, impossible really, for me to tell you, you know, how much to put in any one position because I don't know your income. I don't know your financial obligations. That said, and because it's Friday and you may be wanting to get out and go socialize, hopefully you do, there I am if you want to send me a email. And if you want to follow me on Twitter, as I've said so many times before, there's times when I tweet, some days 4 times, but a lot of times I may not tweet more than 4 times in the course of a month, or a week rather. I do put my videos like this one up on Twitter. So if you follow me on that, hopefully you're going to get some notification. And do follow me on Money and Politics now on YouTube. That way, hit the bell, and that way you can follow me and get notified there too. Before we leave, what are your thoughts on where we're going to be in the overall market? And what right now is your hottest stock to be holding between now and July the 4th, which is kind of our halfway mark. I think right now we're not out of the woods on this. Just today I was covering the Pentagon and the briefing about what's going on in Ukraine. So the world is going to be somewhat distracted for a while. We've got the Olympics coming up in China. We're going to have Ukraine hopefully fading into the background. Hopefully Putin doesn't go in, but I don't know what he's going to do. But so we're not out of the woods on the overall threats to the market. I don't think the interest rates, as I start off by saying, are as dire as some people do, number one. Number two, it's very important that the Fed raise interest rates because they've kept the money too cheap too long, and that's what's causing this inflation, among other things. And the other things are the policies I would be critical of on oil and gas of the Biden administration, which has caused the price of oil to the supply of oil not to be there, and that's driving up costs as well. So let me know what your hot ticket is. What's your hot stock, or if you're going to play the indexes, are you going to play the UPRO, the TQQ, or just buy the S&P 500? Folks, have a great weekend. I still have to run out and do a couple of errands here before nightfall. And again, I apologize for not getting back to you. I do like doing these. I like talking about it. Something I haven't done and I've been meaning to do, and I apologize on that too, is I'd love to do like a live show some Saturday afternoon and take some Q&A. Also, Allie Braun, B-R-A-U-N, and I'm trying to bring up, who bought the first NFT, launched her own YouTube channel today. So she and I will work out a time where we can do an interview with her, and she can talk about her channel and what she hopes to accomplish with that. And so the Humble family can help each other. In the meantime, folks, have a great weekend, and I'll see you very shortly.